Welcome back to my channel. This is The Right Property, where I bring you information before deals. We know we need information before we go out doing deals, especially real estate deals. That's what I do on this channel. My name is Yemi Adigorite. Thank you for joining me today. What are we talking about today? Interest rate. At the end of this video, I'll tell you what interest rate is, why interest rate is important, and most of all, why it's a myth. Interest rate is just a myth. So, what is interest rate? Very simple. It's the reward you get back for lending someone money or saving your money in the bank, just for every regular person out there. When you put your money in the bank, especially in savings accounts, the bank adds interest to it because they're using your money for business. When you flip it around and you now go into the bank to borrow money, the bank charges you interest on that money. Interest rate is very crucial when it comes to real estate. Cuts across real estate, even spills into other parts of the economy, because interest rate affects house value, affects supply and demand, affects individuals' affordability of mortgage. Interest rate matters a lot. 1% increase in interest rate can equal to thousands of dollars. So when you're sitting down across from a mortgage broker and they're talking about 5% interest rate, my goodness, they're talking hundreds and thousands of dollars. But they use very low numbers, 2%, 4%, 6%, and you think it's good. Not too bad. That's why most people that get private mortgages collapse along the way. They can't make it. The mortgages are like $7,000, $8,000 a month. And with private mortgage, remember, you still have to give them back everything you're borrowing. What you're paying them is just interest. But that's not the discussion for today. Interest rate. Why does it matter? Because it affects your ability to buy. It affects supply and demand. Affects your even sellers, what the sellers are asking for. Let's do high and low. For low interest rate, everything becomes expensive. When interest rate is low, there are more buyers in the market. Sellers are forced to ask for more. It's just very simple like that. When interest rate is high, the opposite happens. There are more sellers in the market and they're forced to reduce their price because there are less buyers in the market. And why do I say interest rate is a myth? Because of the fact that in a very short period, 3 to 5 years, when you're doing real estate business in Australia, Canada, New Zealand, and United Kingdom, when you're doing businesses in those countries, you have to remember that you have to come back to renew that mortgage. When you're buying a house in the US, there are no renewals. Whatever you lock in your year one is what you pay to your year 25 or 30, depending on your amortization. But in Canada, UK, Australia, and United Kingdom, whatever you lock down year one, in year 5, they're going to review it. They're going to renew you at that year's current interest rate. And that's why when you're looking to buy in those countries, interest rate is just smokes and mirrors. It's not for real, because in year 5, it changes. And that's why buyers in these countries that I mentioned, you have to be aware. Get the deals you can get now in a buyer's market and leave the interest rate comparison, just for show. It's just for show. Don't look at interest rate Look at what you can afford, when you can afford it, and get it. Because in 5 years, everything changes. All right? That's why it's a myth. On this channel, I'm looking out for you. If you like the video, please share, like, subscribe. If you've not subscribed, I don't know what you're waiting for, because on this channel, all I want to do is see you at the top.